The DSCR game most new investors don't understand. A lot of new investors think DSCR loans are just, do I qualify or not? That's not really the game. The real game is structure. Hey guys, this is Sal Buscemi with Mortgage Universe on YouTube. Because once you spend enough time in the DSCR world, like I have, you realize every deal becomes a balancing act between credit score, loan to value, cash flow, property type, reserves, and overall risk tolerance from the lender itself. That's where this gets gritty, because investors online love talking about just get a DSCR loan. Meanwhile, behind the scenes, the structure can completely change the deal. For example, higher LTV usually means higher risk to the lender. So what happens? The lender may want higher credit scores, stronger reserves, better DSCR ratios, or cleaner properties. That's the trade-off. There's got to be some positive compensating factor. Everybody wants 90% leverage, low rates, minimal reserves, flexible credit, but lenders are constantly balancing risk buckets behind the scene. That's what most investors never see, because if somebody comes in with 780 credit, tons of liquidity, strong reserves, stable investor experience, the lender may get way more aggressive. Maybe higher leverage, better pricing, more flexibility on the actual ratio, the DSCR ratio. Now compare that to lower credit, tight reserves, borderline cash flow, unique property, rural, completely different conversation. And this is why experienced investors stop asking, what's the rate? And start asking, what structure actually makes sense here? That's a massive mindset shift. And by the way, if you guys are into these kinds of conversations, real estate investing, DSCR stuff, other non-QM, definitely like and subscribe, because I'm going to be talking a lot more about this kind of stuff. Now, here's where this gets really interesting. LTV and credit score are heavily connected in the DSCR world. A lot of investors think, my property cash flow, so I'm good. Not necessarily. A lender may love cash flow, but still tighten leverage because the credit score is lower, or reserve profile is weaker, or no reserves. Or the property itself creates risk, or maybe you're a first-time investor, or maybe they don't like the area of the property. That's why somebody with 800 credit may get access to 80% LTV, better rates, interest-only options, more aggressive structures, while somebody else at 660 credit or less might suddenly be capped lower, seeing pricing adjustments, or need much stronger DSCR. That's how lenders offset risk. And another thing new investors underestimate is how much property type matters too. Single-family rental in a strong suburban market, very different risk profile than a rural Airbnb cabin or a unique luxury property, mixed-use building, or a condotel. Every layer changes the structure. That's why DSCR lending is becoming its own ecosystem entirely lately, because now investors are balancing cash flow, credit, liquidity, leverage, exit strategy, property quality, all at the same time. And honestly, this is where mortgage brokers become extremely valuable for investors, because different lenders price risk differently. One lender may be aggressive at 75% LTV with lower credit. Another may dominate high credit Airbnb investors. Another may love interest-only structures. One may love no ratio. One may love low ratio. Another may hate rural properties entirely. In fact, most lenders do. That's why lender fit matters so much. And eventually, experienced investors realize the financing itself becomes part of the investment strategy, not just the property. Because over-leveraging can kill cash flow. Too little leverage can kill scalability. Bad structure can trap liquidity. Weak reserves can create fragility. This stuff matters. And what's interesting is the best DSCR investors usually become obsessed with balance. Not maximum leverage at all costs. Balance between risk, cash flow, liquidity, and scalability. Because eventually investors realize surviving long-term matters way more than squeezing every last dollar out of one deal. And honestly, that's where DSCR investing starts becoming much more strategic than most people realize from the outside looking in.